We'll go ahead and get started. Like always, if you guys have any questions or anything, I will stop periodically to answer them, and then I'll also ask again at the end. Feel free to ask any questions you have. There's never a dumb question. So, all right, we'll go ahead and kick it off. Got quite a few people here. I'm sure we'll have a few joining as we go and everything too. But like always, this will be recorded and stored for later. All right, so we're going to get started with just the Bitcoin chart. On the daily, this is Bitstamp we're looking at right now, and it's Bitcoin to USD. And like always, we're just going to go through, and I'm just going to kind of explain a little more today how specific indicators, oscillators, or whatever you choose to use, horizontals, Fibonacci, etc., can be used on different assets. Like say if you were just starting up your day and you hadn't looked at the charts all weekend or whatever, and you want to just go through and basically look at one after another, quite a few assets, and determine, is this in an uptrend? Is this in a downtrend? Does it look like, a potential buy opportunity in the near future or a sell opportunity in the near future? Where those might be, should you be de-risking? Should you be investing periodically? Essentially just looking at the different time frames, looking at the different charts and different assets, and just kind of giving you guys a basic idea as to what I do when I look at an asset. So some of these assets I look at daily. Other ones I probably haven't looked at in months. I think I've looked at all of them at least once before for you guys. But, some of these are basically like a fresh chart for me. So I didn't go through and look at them ahead of time or anything like that. So you guys can literally just see like the mind power in action and exactly how I do it. And that way you get like the kind of like unadulterated version of what's going on here. So obviously Bitcoin is one I'm super familiar with. So you're going to hear a lot of the same stuff. But so here we have our Bitcoin chart. We're looking at it on the daily, which obviously, we talked about this last time. Once you're above the 200 moving average crossover here, and as long as the red is above the yellow, you're basically in a continual uptrend. So what we're looking at here is we're going to zoom back out and look at a little bit longer term. So here I have the monthly chart, and what we had talked about previously with the monthly is the previous resistance was right down here at 10,766, but we also had a wick up here to the exact same area where we're at right now, the 13,875. So those are two areas that are key that we're paying attention to. Some people only like to look at candle body closes. Some people only like to look at wicks. I like to look at both. I think the best thing to do is look at everything from both main perspectives. And then that way you can have a better idea what everyone else is looking at, instead of like half the people are looking at wicks, half the people are looking at closes, and you're only looking at the one that you like better. Instead, you're taking everything into account. Alright, so the first thing I like to do is go ahead and put in my supports down at the bottom. One's based on wicks, one based on candle close, and same at the top. One is based on wicks and one is based on candle close. And this is a very important area, obviously, just glancing at it, because we had our wick where we topped out right here. We had our candle body close where we topped out right here. And now we had a candle body close where we topped out right here. So the last time we had this exact situation happen, we pushed up to 20K, sold off all the way back down to this, and then we opened up, pushed back up to I think 17K, and then we sold all the way back down and closed at 10,000. So we basically had a $10,000 candle and a 50% sell off from the top to the bottom. But from where we're at basically right now at that 14,000 range, we went up another 6,000, and then we went down another 4,000 for that candle close. So this is obviously a very high volatility area, a very important area as far as like the chart and what potentially is going to happen in the future. So that's obviously a key area where we would expect either continuation or topping out. So that's what we're paying attention to right now. So as you can see, it's very hard for me to get bullish on Bitcoin right now when we're essentially at the top of this range. Now, like I said, we could easily get a wick up here, but if we get a close up above this area we're at right now, this 14,000 area, I mean, to me, it's undeniably bullish. Now, again, though, because of the macro situation with the world economy, with everything going on, stock markets, the dollar, all the different assets, silver, gold, all the other main things we're looking at right now, obviously CV, all that stuff, it changes things a little bit, and I'm not quite as confident as I normally would be, because in a situation like this, it's hard to have a steady, reliable trend when there's so much uncertainty going on. So again, that would make me extremely bullish in relation, but again, I'm not going to get like 100% bullish on the whole situation, just because we get essentially a candle close up here at like 15,000 or something. So that's our monthly, basically just a quick look at it. And then I'm also now going to take horizontals and draw them in again. A couple more key places, obviously, where we bottomed out on our higher low here, and then on our lower high here. So we're above the lower high here. We're above the 200 MA. It's not even populated on the monthly. And then obviously, uptrend. Red is above the yellow. So obviously Bitcoin looks bullish based on that. Now what I'm going to do is go through and just do a quick fib on here. Alright, so this is where the chart's going to get like real busy, obviously, just with so much going on. But essentially what we're looking at is the fib from the top of the overall trend to the bottom, and then the fib from the previous high to the bottom, and then the fib from the bottom to the overall top. And then there's not really a reason to put a fib to this one yet, because we're not near to confirming like an actual topping out pattern. But essentially what we're looking at is just what's going on with these actual fibs. And the potential areas that we would top out or move up to. So obviously, like we said, this is a key area where we might top out to. If we break through this area, the next target would be the 886 up here at 15,800. And then after that, it would be the double top 1.236 up here at 19,800, 20,000 range. And that is just the first fib extension from the green fib, which is from the bottom to the top of this move right here, also lining up perfectly with the double top from the wick from our all-time high. So, and then once again, same situation right here. We have the 886 from the all-time high to that previous pullback, and then we also have in between there the 786 and the double top for the wick right here, and then also the candle body close from back there. So based on those things, that's our Fibonacci, that's our horizontal supports, that's our moving averages, all that good stuff. Now let's take a look at the indicator oscillators. Once again, what I like to look at is on the Stoch slope, the key for an uptrend is the histogram is above the slope line, and the slope line is blue, and the histogram is green. So we have multiple histograms in a row. We're above the blue slope line. So on the monthly, we are in an uptrend. And then also, once again, the blue on the Jewel Thief is above the purple or pink, and we've gotten the buy signal already, and we're moving up. We're basically in like we're center toppy on the range. We're basically moving into the bullish control zone at 80 if we go any higher, but we need to be very careful, because what happens a lot of time is the bullish control zone at 80 and the bearish control zone down here at 20 will act as resistance and support, respectively. So once you break above them, you come back down, you'll test it as support and then continue in that area, and it will stay lit up red. It means the bulls are in charge, but you need to be careful because you're potentially in like topping out regions. And then same thing on the bottom. Once you break below the 20, it means the bears are in charge, but you're potentially topping out at the, or bottoming out in the bottom regions. So often you get the best buys in the bearish control zone, and the best sells are going to come in the bullish control zone. So if we get rejected right here, that would line up perfectly with the resistance right there. If we move up into it again, that would be basically mean we're probably going to go parabolic, and you know, you're going to see sometime in the next couple months after that, you know, a massive move to the upside followed by the best opportunity to short, because it's typically like the parabolic trend ending. Same with the sell-off. You know, we were selling off forever and then finally get the massive dump, and that's like the parabolic dump coming down here, and then we bottom out, and that's your best opportunities for buying. So that's Bitcoin on the monthly. Just looking at like the long term, and we could switch over to the weekly. It's going to tell you the same thing. All this stuff right now is currently going to line up the same. You know, we still have the parabolic SAR telling us, you know, we're in an uptrend. We came down, basically got like the retest and continuation. Typically, I like to see it come down to the actual slope line and get the bounce, but we didn't even come down near to that. We did line up perfectly with the 21 and found support on the parabolic SAR though. So that's obviously two key things you can look at. And then once again, this is a danger zone right here I like to be careful of, is when we're getting the buy signal near the top of the range at resistance. A lot of times you will get like one more stab up and then it will fail to break ahead. Now, it doesn't mean it's just going to start selling off and go to zero or anything, but you know, it typically goes into either consolidation or trend reversal at that point. So once again, we're at the top of the range here, and we're putting in divergence as well. So that's again something we definitely want to pay attention to. We have a high right here, we have the same high right here, we have a high right here, and we have a higher price right here. So there's a divergence between the price is higher than this point, as we're here, the oscillator indicator is lower than this point right here. So you know, just want to be careful in this area obviously as well. Key time for us to top out. So all right, so that's it for Bitcoin, and that's the basics of what I look into and what I pay attention to. All right, great. So we're just going to do the same thing again. I just went through the list of you know, asset requests that you guys had placed in the chat, so we're just going to knock through all those. Next we have PIVX. This is on the daily. I just did all of them to the dollar just because nobody specified anything else. So in the future, if you want them done to Bitcoin or Ethereum or whatever you know, your currency is, that's fine. Just let me know. And I'm going to use slightly shorter time frames on all these, just because most of them do not have like the length of record as like Bitcoin does, for instance. So this is our weekly on PIVX right now. You know, we're going to take the fib all the way from the bottom to the top, from the top to the bottom, and we're going to put in some key resistances. But a lot of times the horizontal resistance and support will line up perfectly with the Fibonacci's. So I'm actually going to skip over that, and then if I see something that's sticking out, you know, that's telling me, hey, we should be paying attention to this, we can add in one of those as well. So and they don't, when you're just putting them on real quick or whatever, they don't need to be perfect. But you know, if you're like fine tuning it or whatever, you may want to come down here and make sure they line up exactly. Also, when you use the fib tool, you're supposed to go from like the bottom point to the top point, but I like to drag them out to the side like this so I can see them all like correspond and how they correspond to price action. I don't like when they stop over here, because a lot of times the bullish fibs will also act as support and resistance on the way down, and the bearish fibs will also act as support and resistance on the way back up for your like retraces inside that zone. So As far as moving averages are concerned, we have the 200 populated right here. We are below the 200, so that's bearish. We are also in a long trending downtrend on PIVX, and now here we just basically attempted to retest, made it back up to the 89 and got rejected. And now here we crossed again. The red is below the yellow, and we're continuing to the downside. So that basically looks like a hard rejection of an attempt for a bullish retrace of the bearish downtrend. Now what we need to pay attention to though is we did actually make it up to the red 236. I think maybe that'll show up a little better. So we're going to use the purple 236 right here. We did make it up to the purple 236 right here, which lines up perfectly with the 382. When you're using your Fibonacci's, you want to determine if you got like a legitimate top or bottom, you want to at least retrace to the 236 before you can attempt to like validate that. So when we got this push up here and hit the 236, we basically validated that this is a potential bottoming area. Now again, it's a potential bottoming area. It does not mean that we for sure bottomed out. It just means that there's definitely potential now. We've retraced at least like basically 25% of the move. So once you retrace 25% of the move, you know, your potential is there that this could be the top or the bottom. So once we push back up based on moving averages, this chart is bearish right now. It's in a long trending downtrend, from like 2018, and you know, essentially just got rejected off a key moving average on the 89 here. Essentially what's going to happen now is we put in a low right here, then took out the low with a wick, but got a confirmed candle close above that. So potentially what we're looking for right now is a low right here that's going to be higher than these previous two lows. So we could have three potential higher lows in a row, and then, you know, potential for divergence as well. You know, if this tops out or bottoms out right here, you know, we have a bottom that's on the oscillator is below the previous one. And here we have price action that is above the previous one. So if this just bottomed out right now and started moving to the upside, that would be bullish divergence showing up, and then potential, you know, for this to be a legitimate bottoming. And if you look right here based on closes, we have the close right here, we have the slightly higher close right here, and then where we're at right now would be a potential for a slightly higher close as well. And then, like I said, the divergence to play out. And this is obviously like as close as it gets right here, but I'm sorry, this is obviously as close as it gets right here, but we basically have the histogram crossing below the slope line right now. The slope line is blue, saying that we're in an uptrend, saying that this is potentially turning back around, but we also need to pay attention to the fact that we are just slightly below it. Now it's easily could find support and then move back to the upside right here. It could easily happen. It does not mean just because we cross below it, it's done. But as long as we are below it now, we have to assume this blue slope is going to act as resistance instead of it acting as support like normal. But again, it's very easy that we could go slightly below it, get a little fake out, and then move back to the upside. So based on this, we are also now, this is a perfect example too. We entered the bearish control zone right here. People get bullish, get wrecked, because it just continues to sell off. Same thing again. People get bullish, gets wrecked, continues to sell off. People get bullish down here. Finally, you start to get a move up, and then we take out the low. This is often how bottoms happen, though. This is often what bottoms look like. So this is a potential area to bottom out. Now, when we get the third test down here, put in divergence, when we exit this bearish control zone and we get a hard buy signal on this, that's potential. When we flip this slope back over, that's potential that this could legitimately be the bottom, because we have multiple things telling us this is a potential like actual bottom. We have a diagonal slope line. We have horizontal based on divergence down here with the Stoch slope. And the reason I'm using the Stoch slope today, you can use any Stochs you want or any other indicator oscillator you want. This one is just super basic. It's very easy. If it's blue, you're in an uptrend, you get the hard buy signal, you're in an uptrend. You get the red or the hard sell signal, you're in a downtrend. You know, you got the RSI overlay in the background. If the white of the RSI is below the yellow of the RSI, you're in a downtrend. If the white of the RSI is above the yellow of the RSI, you're in an uptrend. You can make those brighter, more clear if you like using those. I'm just not a huge RSI person. But yeah, basically, you know, you topped out and got rejected here, but you are potentially going to bottom out. Based on that, I would look for not an overall just turnaround of the trend, but just a higher retrace. So we failed to get above the 236 retrace previously. So the next target would be the 382 retrace, which would be at 85.5 cents. Followed by potentially like the 0.5, which would line up perfectly with the 236 from the all-time high. Which would basically be right up here in like that $1.67 range. So that's obviously quite a bullish move. But again, we might not make it that high. Might get rejected by the 200 exponential or the 200 simple. But this thing is far from in an uptrend or reversing the overall trend. It's just potentially looking like it could get a bullish retracement of the massive bearish jump. And keep in mind that, this 29 cents that it's at right now, 30 cents that it's at right now, the all-time high on this thing was almost $16. So, this thing has sold off, basically, once something sells off over 75%, to me, it's a dead asset until it proves otherwise. So, I would not get anywhere near bullish on this thing anytime soon, but there's definitely money to be made, like swing trading and stuff like that, on these potential, like, pushes back up. But the last thing I would do is people always say, I'm all in on this, it's the future. Whenever I hear somebody say that, I run the other direction because those are the worst people to ever listen to. People that are saying, I'm all in on XRP or I'm all in on, whatever it is. If it's not in an uptrend, it doesn't make any sense to be all in on it, one. And two, you should never be all in on anything. You should be all in on your education. That's about the only thing you should ever go all in on. All right, so that's PIVX on the weekly. And then we could basically, based on fib targets and everything like that, assume that once you hit the 0.5, if you get rejected again at this 382 and sell back off, our next target to the downside is going to be 5 cents. So if we're at 30 cents now, and the next potential target, if we break through that 0.5 retrace, is going to be the 618 at 5 cents, you're looking at 30 cents down to 5 cents. So you're looking at selling off essentially like another, like, I don't even know what that is, 80% basically, like just roughly. So this is a super danger zone one right here. Again, you can make a little money scalping this thing, but the real trade on this right now is to the downside. It's in a confirmed downtrend for a long period of time and does not look like it's reversing yet anytime soon. And the most dangerous thing to do is to try to pick bottoms and tops like that. So again, there might be a scalp trade in the future here. You might throw a couple dollars in this thing, but this is not where you want to be if you're invested in something, unless you bought right here, and still that's a dangerous place to be. So next we have BNB to USD, and once again we're just going to take a little wider of a look here. Alright, so weekly on BNB, overall we haven't actually populated the 200 moving average, but we're basically above the next substantial one, which would be the 89. So we are also red above the yellow. So this is in an uptrend on the weekly, which is obviously good. You're above the parabolic SAR, coming down right now to retest the 8 and also the parabolic SAR. So if this holds right here, you could be in good shape. If it sells back off, the next target's going to be the 21 at $24.50. Based on moving averages, which is going to take out the parabolic SAR to the upside, which typically results in a long trending trade back to the downside. Every time that happens, you see a massive sell-off. So we are basically in danger zone right now. This is the best area typically to take a trade off of, because you're basically, the closer you are to the SAR, the more likely that is to be like a pivot in the market. So if we're right here at the SAR right now, and then we find support and move to the upside, you have very little stop loss before you find out if you take it out. And again, if we're going to go to the downside, you're very close to the SAR right now. It's crept all the way up, and you're very near to the top right here. So if you took a short on this position, you're also very close from like invalidating your short by taking out the previous high. And then also, like, the potential move to the downside is massive. So and then we'll go ahead and throw the fibs up first, and then if we want to, we can go back through and do horizontals once again if they don't line up. So but overall, BNB is definitely one of the more regularly, continually bullish cryptos in the space. So yeah, BNB definitely has some like bullish aspects to it. I mean, the fact that if you're trading on Binance, you get a discount on your fees, and then obviously, like, you know, it's functional in the sense that it benefits you in some way already and exists like for a reason. And then also, obviously, it's an asset that you can invest in. But the actual chart is great on it as well. So regardless of if you like, you know, Binance or how you feel about the whole situation, you know, it's functionally probably one of the better like fundamental cryptos to own or invest in. And then obviously the chart corresponds with the fundamentals. So whenever you have technicals and fundamentals lining up, that's always good. And then another good thing about BNB is that it tends to operate independently from Bitcoin. Like for instance, you know, it put in an all-time high here during Bitcoin's like bearish consolidation or bear market. So that's something different. You know, that you don't see. Same with Link, we're going to take a look at next. You know, it put in an all-time high and has been around for a while. So whenever something's brand new and puts in an all-time high, it's much less. It's much less like weighted like importance. But BNB has been around since like like the end of 2017, and that was its all-time high back then, like just after Bitcoin, which is when most of the alts topped out. And then it took out that all-time high as where Bitcoin came back up and would have been like roughly around here on the chart. So, you know, this is one of the ones where it basically came back down and retested that previous sell-off and then moved back to the upside afterwards. Now, is it going to take out this high now, or is this just going to end up as like a double top zone right here or double top right here? You know, time will tell, obviously. But based on the weekly, now based on our Fibonacci's, essentially like from the bottom to the top of the first. What did I do here? Okay, yeah, okay. So from the bottom down here to the top right here is in blue. So when we came back down, we sold back off and found support at that 236. And then when we got that massive dump, it came down actually to the 382. Now, it didn't close anywhere near that blue 382, which is good, but it retested it. So if it was going to sell off and top back out right here, our next target would be the 0.5, which would be $4.36. And we're currently at $28. So that is a massive move to the downside if it does come back down, or potentially just getting a lower close here, but higher close than here, back at the 382, which would be $7.33. But now as far as like topping out here, you know, we're basically at the 886 for the all-time high, that previous high right here in orange. So we basically topped out, came back down, attempted to get above it again, topped out, came back down, attempted to get above it again. Now, if we break through, I would expect us to retest the all-time highs at 37 something dollars. But if we do not, that's when you start looking at the retraces inside of this area, which could line up perfectly, you know, with any of these fibs right now. So if we already tested the 886, failed to get above it, come down to the 786, come down to the 618, come down to the 0.5, come down to the 382. But you're just going to stair step your way down on these previous fib levels and see what the actual like support level is going to end up being. But once again, you have a higher high right here, and then from the low from the previous high, you've put in a higher low from the previous low. So in all reality, what I would expect to happen based on, you know, diagonals, like which are less reliable than horizontals, because not everybody looks at them. They're more subjective. You know, they can change based on like time frame, log scale, etc., etc. But essentially, when we put in that low from the previous high, and then we put in a higher high, you would expect it to come back down, and then we form this trend line right here, and then move up, and then when we come back down, you would expect it to retest this trend line again. So even though we could get a wick like substantially below that trend line, what we'd be paying attention to is if this uptrend line breaks, and then obviously once again the moving averages. And then based on the indicator oscillators, we do need to be careful here because the typical sell signal on the TJD Stoch TJD TD MacD is going to be 2 red histograms in a row. So we're already working on the first one. But again, you'll see like one red histogram right here, one red histogram right here, but you never get the second one. So you would never actually exit your position. And then the same thing right here. Once you get the 2 histograms in a row, that's when you take the profits or short sell or whatever you're doing based on my trading plan. Well, that's what I do. So, and obviously, like always, it's not financial advice. I'm not your financial advisor. Markets are extremely volatile, all that good stuff. So, but once you start putting in those histograms, you tend to continue putting in those histograms. The same way, once you put in the green histograms, find resistance at the slope line, and then it's all green histograms from there. So if we put in this histogram red right here, and then we put in another one after that, that's when we need to be very careful. And the first one is going to get printed. Today is a very important day. Actually, it's just the weekly closing. The monthly would have already closed on all this stuff. Yeah, the monthly would have already closed. But yeah, it's a weekly close on this one. So I was thinking we were looking at the monthly chart. The weekly close is going to get put in right here. So if we get another weekly close next week, if we get this one in red and then next week's is in red as well, we're going to pay attention to that because that's going to be 2 in a row and likely continuation down to at least retest the slope line right here. And then we did get the hard sell right here at the absolute top where the slope line flipped over from blue to red inside of the bullish control zone. So it had you shorting right here, obviously at the best possible spot. And then if you look at it like that, that would be our top on the histogram. And then we have a slightly higher top on the histogram right here with a slightly lower close or same wicks. So again, you're starting to put in divergence here based on the indicator oscillators as well. Based on the RSI is not actually divergence, but it is crossing back below the yellow. So based on all that stuff, BNB looks like it is potentially topping out right now. But, again, we don't confirm that until we get back down to the 236 of this move right here. So we'll put a bullish bullish fib on this one, and from the top to or the bottom to the top right here. Once we topped out, we sold back down and already touched the 236 and then failed to put in a higher high. So typically what's going to happen now is we're going to come back down to the 382, which is going to be $17.80, and that $17.80 once again is going to line up perfectly with our diagonal trend line support right here. So that would be a potential area to find support and potential area to be long in this thing, assuming that it's going back to the upside. Probably would line up perfectly with a retest of the TJD TD MacD as well, a retest of the blue slope line. And as long as the histogram is above that, and as long as we're moving back to the upside, it still looks bullish. So, and then again, we fell back below the bearish control or bullish control zone right here, but it's easily could find support at the 50 area right here, and then move back up again to the upside. So, so next we have our link chart. I'm on the daily right now. I'm going to switch over to the weekly. We don't have a ton of information on link. So our longest moving averages in this case are going to be the 50 and 55. But we can treat that the same as if there's no 200, then you look at the 89. If there's no 89, we're going to look at the 50, 55. And once again, we are above those. The red is above the yellow, but price action is at the red retesting. So we are definitely showing some weakness on the weekly for a link to USD. And, we have a bunch of red histograms in a row. Once again, we got 2 red histograms in a row at the absolute top. We got the sell signal at the absolute top. We got the flip of the red on the Stoch slope at the absolute top. So once again, you can see why these are 2 of the best indicators to use. They literally call it the exact top to a T without any doubt. So can't beat that. We are above. We're just now populating on the weekly the slope line, which is blue on the MacD. But, we are coming down for that retest right now. So we already found support on the 21. If we fail now to get back up, we're going to come back down and retest the 50, 55 down here at $6.88 or potentially $6 here. Let's put up a fib and see where we're at as well. And as far as fibs are concerned, retested the 236, wick down to the 382. So again, if we continue to sell off, I would expect us to either double bottom at the 382, which would line up with the moving averages by the time they populate up to there. Or if we take those out, the 0.5 is going to basically come in line with these previous two tops. So we topped out right here, we topped out right here, and the 0.5 is right around that same area. So again, if you just adjusted that like slightly, or drew in a horizontal line, you could get like a little bit more confluence. I always just go from wick to wick. That's just how I do it though. But you could easily just add in a horizontal if you wanted to. You can do this is a good example of where we could do a micro bearish fib. Once we took out this 236 right here and confirmed that we potentially topped out, we're basically able to fib from wherever we bottom out right here. So we're just going to add in a micro fib, which is going to be this orange one right here. And the orange one, again, once we bounced from the bottom right here and took out the 236, we potentially bottomed on the micro. So off of the 382 macro, we bottomed on the 236 micro and continued to the upside, topped out at the 0.5 of the micro. So if we continue to move up right here, the next target would be the 618 at 1360 roughly, 1375, and then the 786, 1628, and then finally the 886 at 1834. Which is potential, as we've already been selling off for quite a while, and then we're potentially going to find support now on the TJD, TD, MacD. We have already found support on the 382, so we could potentially attempt to come back up here and do exactly what like the S&P and stuff is doing right now, which is attempt to come back up and take out that high, start to put in divergence potentially, on shorter time frames, etc. But that's what we're looking at this point. So movement back to the upside, I would look at us to top back out around that $18 range if we got to move back up here. Potentially taking out the parabolic SAR and then selling back off, as that would be like a good pivot in the market. But as far as bullish, that would be our target. As far as bearish, once again, either the 382 retest at 728 or the 0.5 retest at 541. Or overall, this is a very bullish asset. So the likelihood of it to remain in an uptrend and come down lower than the 382 or the 0.5 is very unlikely. So I would not expect a pullback to the 618 on this asset. If anything in crypto, especially this, remains bullish, I would not expect it to come down to $4 anytime soon. I would think that your best buying opportunity would be the previous highs back here or that 0.5. But more ideally, probably a retest of the 382, as that's going to remain more bullish if that's what we get. So that's basically what we're looking at for Link right here. Oh, I might have said BNB, but on this one, but I meant Link on this. Overall, once again, Link is one of the more bullish coins. Obviously, only goes back 2019, so it has much less. That's on Coinbase. I think this has a bunch more history actually on other exchanges, but this is the all-time high, obviously, for Link, and it has remained bullish and continually took out the all-time high throughout this whole situation. So it's definitely one of the better investments you could have had over the last few years, based on the chart, based on price action. As far as fundamentals, it does not have the best fundamentals. There's been a bunch of, it's basically a 4chan, like, pump coin. And then also there was like a bunch of fundamental news about the founders and devs like dumping on the market previous times throughout. So fundamentally maybe not the best, but overall technically one of the best. So XTZ on the weekly, once again, does not have a ton of price action or ability to chart back, but based on the previous low down here at 75 cents roughly. This is again on Coinbase though. Should have pulled this up on a different one, but it'll give us what we need to see regardless. We are below the 50-55 currently and selling off. That is not good, obviously, for the overall trend. We have crossed on the weekly the red and yellow moving averages. So once again, that is not good. The histogram is all red and below the zero line. Again, not good. We are in the bearish control zone, which is once again not good. Potential that we could be bottoming out sometime in the near future, but you don't want to just start buying bottoms assuming based on this. I would rather wait for a hard buy to the upside and the slope to flip back over. I would rather wait for like 2 green histograms to take a potential entry. I would rather wait for a cross of the 8 and 21 on a longer time frame. But again, this thing overall does not look good. Even though on Coinbase it did take out the previous high during this whole situation. Let's throw up a couple fibs here. Yeah, we can't even throw up a bearish fib right now just because we took out the low and we have not come back up since then. So there's not really any opportunity for a bearish retracement, bullish retracement of the bearish move right now. So we have a lot less info that we can use on this chart. But essentially from where we topped out at 445 to where we sold off, we are at the 0.5 right now. Potential area, for us to bottom out. But again, overall, I would expect this thing probably to come down here more likely to the 618 at $1.48. We're at $1.95 right now. Before I would expect that. And you can notice also, this is a good example too. Even though this fib you couldn't have put in place from this previous high because we took that out, you can see how it corresponded perfectly, the 618 and the 786. And then when we came back down right here to the 382, before we had ever even put in this high, and we were running into resistance at the 236 before we ever had even put in this high. So that's a perfect example of how important fibs are. Because if we put the blue fib from the previous high into place, we'll see that it actually was like much less useful to tell us what was going on. Like on the way up, we had touched it a couple times here, found a little resistance right here, but we hadn't even actually put that in. And then after we put that in, price was corresponding underneath the fib here, support sort of on the fib here, resistance sort of on the fib here. Same thing. We weren't really finding perfect line with the fib. So that tells you like something's not quite right. We're not quite lining up with the fib like how we would expect it to typically. And then once we actually topped out here, this fib, all of a sudden, when you look back, the green fib was like so much more useful. So a lot of times when you're fibbing off of a high like that and price action is not corresponding like how you would expect with the fib, that tells you like maybe we didn't put the high in yet. Maybe we didn't put the low in yet because it's not lining up quite right. It's like the algos just aren't reacting the way you would expect to a fib. And then as soon as we top out right here, now all of a sudden look at this fib. I mean, perfect. Obviously that one. Perfect down here, resistance and support. I mean, it's lining up so much better. Even the targets that were before we ever put in that fib were lining up like exponentially better. So it tells you like, sometimes like maybe we're not putting in our high yet. Maybe we're not putting in our low yet. Something might be up. So matter of fact, I will go ahead and just kind of demonstrate what I was just talking about right here. You'll see if this was going to be our low at the 0.5, the 236 lined up perfectly with the 382 of the green previously. So that gives us kind of like that same like, yeah, maybe it is. Maybe this is the bottom right here. Maybe we are getting to where we need to be because we're running into that. Now, if we were to come back up and find like perfect support or resistance at the 382 or support at the 236 after moving above it, that would make me think that it's more likely that we did in fact bottom out right here. The same way that this did not quite line up, this bearish retracement, like a bullish retracement of the bearish move, might look a little more appealing. And if that was the case, I would expect us first to come back up to the 0.5, which would be the bullish move of the bearish dump, and that would line up perfectly with the 236, and that would be around like 293. But at that point in time, I'd be looking to get out of this asset, as once again, it would just look like a dead cat bounce off of a massive sell-off. But this thing is far from bullish. And I would wait for at least a couple of these things, to tell us there's the fib targets potentially, but a lot of times you'll just see a reactionary move off of a fib target. It's not going to tell you like, this is the bottom or this is the top necessarily. It's just going to say like algos are going to be triggered at those points for a short-term like scalp or whatever. But the moving averages, the TJD, TD MacD, the Stoch slope, those are going to tell you like the actual long-term trend and potential for that move. So All right, so that's Tezos XTZ to USD Coinbase. All right, you can do basically like try to use Fibonacci's to project a potential top. You can do that. You could essentially have, before ever, if you were back here and you were saying this just doesn't quite look right, you could start moving it up and looking for an area of confluence, which would have probably told you like somewhere around this area. You can do that, but the real way to do it is the responsible way, the reliable way to do it is to use fib extensions. So the way you would have done that is you would have taken, and look, this is a perfect example. I'm glad you asked that question. It's a perfect example of a fib extension that's probably going to line up perfectly without having done this already. All right, so that was our top to bottom right here. And then we were looking at, obviously we came up to the 786 right here and found like resistance. But then we came back down to the 618, found support. And then we came all the way up to the 886, found resistance, sold off again. And then we took it out and actually took out the all-time high after moving past the 886. So if you were using a fib extension, it would actually project your target up here at the 236, the 1.236 at $5.51. Now, unfortunately, it took out the top and then ran out of steam, so it never actually made it up to that. But that's the responsible way to do that. Now, if we go back one more time, now if we go back one more time, and I have in here a bunch of fib extensions, but I don't have the, let me put in the 1.786 real quick. So from the previous high, or basically like when it showed up on Coinbase, to the low right here, and then you take the fib extension from that, the 1.786 in red right here, which is just, all it is 100% of the move plus your regular Fibonacci numbers. So the 236, the 382, the 0.5, the 618, the 786, and then this is probably the 886 is where that wick goes to. But you'll see the actual fib extension of the 1.786 of this move right here, which is 178% of this move from there to there. So it takes out the high and then goes up another 78%, 79%, whatever. That's actually our top right here. So the way to legitimately like target based on Fibonacci to the upside of an all-time high or potential target to the upside is by using the fib extensions of the bearish move. So as we have not quite reached it on this move right here, which was the first one we looked at, and we obviously have not quite reached it on this move right here. But we can use, once again, the one in red right here, because that's actually from the top right here to the bottom right there. And then we take out the all-time high, make it up to the 618, 1.618 on this high, come back down, and then all the way back up to the 1.786 on this one. So that's a time where you could specifically use fib extensions to basically like plot out a target in advance without just kind of like guessing or assuming or estimating or whatever. So, all right, great. On to the next one. So here we have DOT. This one has barely any time whatsoever to look at. So, but based on, we'll just start with our moving averages. You know, we are below the moving averages. Obviously bearish. We only have the 50 and the 55 to use. We have been in a downtrend basically since the initial move up when this was like first released during like the little bubble. So again, overall bearish. The red is below the 8 is below the 21. Red is below the yellow. We attempted one time to get above it. on this pushback up here. Everybody tried to get bullish once again, and once again just got wrecked. So, you know, from the all-time high up here at like basically $7, you know, we're at 50% of that right now. We're at $4. So overall bearish. Got the cross again. Red is below the yellow again. Overall bearish. Multiple histograms. Overall bearish. We are above the slope line that's populated right here, which it is blue. So we could potentially find support at some point in time and move back up, at least for a dead cat bounce. But once again, bearish. And then we got rejected at the bearish control zone and sold off right there. We basically got like the hard sells from the Stoch slope. It is red. So once again, bearish. Potential area we could find support right here though. Let's throw a couple fibs up. All right, so based on, and I just, again, just these numbers get in the way sometimes when you're trying to go from the all-time high. So just imagine this was drawn from the tip right there. It's just for convenience. I drew it all goofy like that. So just because it annoys me, and then between the push to talk and all that stuff. So so from when we went to the bottom to the top, sold off down to the 236. As soon as that broke, you know, basically dumped down here, almost a 786, but definitely confirmed to the 618. Pulled back up all the way to the 236. So it went from the 618 up 1, 2, 3 fib levels, sold back off, double bottomed right here. This is a lot like what Bitcoin did, you know, back in 2017. Came down and put in a horizontal support and then took out that horizontal support. Didn't even come close to the measured move though. As soon as that broke, it essentially like found support right away and then bounced back up. Put in another lower high though, which again is bearish. And then from there, came back, found support again on that same region, and then pushed up to the top. And when it pushed up to the top, it came up to the 382, which is, you know, once again, a key fib level. So once it came back to the 382 right here, we had come to the 236, we had come to the 382, we had come down to the 618, we come below the 618. The next target to the downside would be now to the 786. So I would expect $3.39 on DOT in the very near future. And if you were going to come back up to the upside after that, you would expect it to come back up to the 0.5, which would be back to $4.37, which is just slightly above where we're at right now. But again, we're below the moving averages. We took out the parabolic SAR. Everything is pointing currently to the downside right now. You know, as far as long-term trending trades, as long as you can be on this anyway. As far as where we bottomed out at, we bottomed out down here. We came back up to the 0.5, and then we came back down all the way below the 236. So we potentially could have bottomed out if we move back up to the upside on a bullish move. The 618 in pink at 535 would look like a potential next target. You know, 786, 886. But I would not expect to take out this high right here. So the 618 is probably, yeah, that's going to be like a double top right here. So if it did get bullish all of a sudden, 534 would probably be like my final target for this bad boy. But, you know, after putting in this lower high right here, you know, to some people that's going to look bullish because it's a high, a lower high, a lower high, a lower high, and then, oh, a higher low, we're back in an uptrend. But really, you should be looking at a macro. You should be looking at a substantial one, not just like these little moves inside. So it's very easy to say, if this doesn't take out this high, that it's just another lower high. So that's a high, that's a lower high, that's a lower high. This is all noise. And then again, if this was to move back up to the 618 right here, you know, you could say that's a high, that's a lower high, that's the same lower high, and then back to the downside. So realistically, until it takes out this area right here, until it comes back up to that 786 basically, at $5.98, you're still not even potentially looking bullish to where you would be retesting the all-time highs. So this looks extremely bearish to me. Basically, it just looks like a series of dead cat bounces. Now, as far as a diagonal, This could be a key indicator as to what's going to happen in the near future or what you need to pay attention to. If this diagonal breaks right here, we put in that low, we put in a higher low, we put in another higher low. If this breaks right here in the near future, I would expect a massive move, and I would expect the actual measured move of this triangle to play out. I mean, we're basically operating inside this massive triangle. Got that pump fake, that fake out, the bow and arrow, the little, throw over right here, like throw it down, and then it shoots back up even higher. So that's like your fake out move. And then, potentially once you look at it like that, you could look at the triangle more like this. And although it doesn't line up as good, essentially that's what it's forming. It's just forming a big triangle like this. The only difference is this happens a lot of times. You'll get a triangle forming like this. It will be a bearish pattern. You'll be looking for a massive sell-off, measured move back down to like, $1.50, all-time low. I mean, just something terrible. And then all of a sudden you'll break out to the upside like this. But that's when you just ignore the very first top right here. This is one of my methods that works extremely well. And essentially it's just the idea of the parabolic like theory or the parabola. The slope is extremely strong right here. And now we're still selling off. We're still in a downtrend. But now the parabola is starting to level back out. So now if we got another move back up here and we put in another retest right here, the 618, you would have like a horizontal line. So you would have a slope line that's steep. You would have a slope line that's less steep but still to the downside. You would have a neutral slope line, like a horizontal. And then you would have potentially like moving back into an uptrend. So that's like the parabolic like trend reversing or the parabola reversing. So that's what you would pay attention to. But this to me, if you ignore that top high right there, this happens all the time. You take out that triangle to the upside, it looks extremely bullish. It's a massive fake out, and then you get a huge move to the downside, a horrible bearish move. And it happens both directions. It's like essentially like a fake out of a massive pattern, like a liquidity grab or like a just like a market maker move that you see very common in like all markets, especially on like dying or dead assets. Like this, where it's essentially just finding that same horizontal. More times it comes down here and hits that same horizontal, more likely it is to break to the downside. And I mean, if this thing breaks, it's going to get ugly. I mean, that's the measured move. Conservative measured move is a new low from the ICO, and it's $2.40. If you wanted to get greedy with it, and you went like from the all-time high, I mean, it would be absolutely horrible. Yeah, just like I said, you're looking at basically $1.50, and the 1.618 of the all-time low to all-time high is going to line up at $1.60. So that's probably where I would look at. If this pattern breaks, long-term to the downside, you're looking at extreme danger zones and new all-time lows. And this is a perfect example of a horrible chart. This is a perfect example of like the worst looking chart you could possibly have. This is what basically like the Bitcoin chart looked like, before that big break when we were at 6K and everybody was getting bullish at 6K and saying this is it, we're going up. And then people like me were shorting every single one of these bounces right here, every single one of these, and then it went down to 3K, and then we get down to 3K, get the measured move, drops 50% from that horizontal support, which would be, if we're at $4 right now, that would be the $2 range. So somewhere in between the two measured moves. That would be exactly what Bitcoin did over the bear market. And then at $2 is when everybody would be saying, oh, it's a dead asset. It's going to 50 cents. It's going to 35 cents. It's never going to get out of this, da da da. Everybody sell, everybody short. And then next thing you know, it pops back up. And then you come back up here and do what Bitcoin did and get back up into that $5 range or whatever. So, but that's a just perfect example of something that you guys are all familiar with, the Bitcoin situation, in something else before it happens. So I would assume, based on previous experience charting, the actual asset itself, the idea of decentralized exchanges is great, but there's too many weak links in the chain still. They've not been. It's just not there yet. It's honestly just not there yet, like fundamentally. And the technicals line up with that perfectly to give us that exact Bitcoin situation. So we will finish up these. I have 4 more charts to look at. So and then obviously the recorded version will be posted up exclusively for Discord as well. All right, so here we got XMR, Monero. So here we got our weekly on Monero. We actually have like a little bit more data to look at on this one. But as you can see, we do not have a 200 populated yet. So we're going to look at the 89, which we did cross back above the 89 here previously on this last move up. So that is technically bullish. We're above the 89. The red is above the yellow. That's good. We're finding support at the parabolic SAR. But once again, these are typically the best places to take a position, either for a continuation to the upside, like a situation like this, or a sell back off, bearish dump for a reversal situation like that. So we are histogram above the slope. That's bullish. We are blue on the Stoch slope. That's bullish. But we are putting in potential divergence right here. We have a high right here, which is this high right here. We have a lower high right here on the Stoch, but we have a higher high right here. Now again, we haven't topped out yet, so it's too soon to assume that that's going to be bearish divergence, but definitely worth looking at. And then let's put on a couple of fibs. Kraken has pretty good chart on this. Goes back to 2017. So it should be plenty of info. I basically just grabbed random exchanges to look at and just put them on the dollar. I tried to look for stuff, but I didn't pay attention to like what was going to have the longest history or anything like that. So, but overall, should be pretty reliable, the ones I put up. All right, so we got our bullish move, basically all-time high, 466. We are now at 125. So we're still down on Monero about 75%, which is obviously very bearish. Potentially are turning around the trend though, which is good. But we've seen this in a couple of the other assets we looked at where we poked above the long-term trending, longest trending moving average, and then sold back off. So I would not put it out of the realm of possibility that we could get continuation to the downside. But at this point in time, we made it back to the 382 from the bottom to the top. We came down initially all the way to the 618, sold off one more time, almost to the 786. From the 786, we've bounced 1, 2, 3 fib levels. We're above the 382. Potential target to the upside would be a retest of the 236 at $189. Which is a nice move from here. It's about a 50% move to the upside. If we got continuation, we are just above that previous high right here, which is good as well. Moving averages do not look bad. Parabolic SAR does not look bad. We're at the 0.5 of the bearish retracement from right here, just above it. Next target would be the 618 at $152. Again, that's like another 20% move. So very nice potential to the upside. If we did find support in this region, if we did sell back off right now, potentially putting in a higher low, I would expect us to come back down to the 618 over time, and that would start giving us potentially like a shoulder, neckline, head, shoulder, neckline, and then you know, potential break of the, or I'm sorry, shoulder neckline here, and then potential break would break out. So it would be like an inverted head and shoulders. So this would be a shoulder, that would be our head, and then we put in one more shoulder right here, and then the measured move would potentially be like back to the 886 or even a double top, potentially 786. But this could potentially be developing a long-term pattern, you know, that could look bullish. But again, you could easily expect a sell-off back down to the 618, back down to like $43. So far from bullish on this thing as far as just like buying in right now, unbiasedly assuming that we're going to go back to the upside. But this one is showing definite signs of life and potential. But once again, you know, we did take out this previous high right here, but until we start coming back down and, well, really, there's not a ton of discernible previous highs in this, but you would look at like this one, or potentially this one right here, which is where we're at right now. So this one is doing similar to Bitcoin, and it's been overall fairly correlated with Bitcoin. The only difference I would say is when we put in that low back here, versus the low right here, we actually took out that low based on closes and based on wicks just slightly, as where Bitcoin, when it came back down, you know, bottomed out like just above that area. So this is very close to the Bitcoin chart. But yeah, overall, this one is showing potential, but again, it's looking very, very much like Bitcoin, very correlated to Bitcoin, and it is still way, way lower on the overall price action than Bitcoin. Just because that previous high compared to this high right here, you know, this one was so low that even though we're above it, price action wise, we're still way below. You know, we're, like I said, we're basically at like, we're still down like 75% from all-time high, as where Bitcoin is only down like, I think about 30% roughly right now from all-time high. All right, great. Just a couple more. We got Bitcoin dominance. As you can see, this chart is basically useless now because of Hex. I don't know if anybody else noticed, but you know, Hex had a random like 200 and I think $50 billion scam wick on it. So I'm not sure exactly what that was. I have not heard anybody talk about it yet. I'm not sure what's going on. Initially, I thought that it was just a misprint, because if that misprints on Hex, it's going to misprint the Bitcoin dominance. It's going to misprint the total market cap of crypto, but it has not been corrected yet. So at this point in time, it looks like it is probably just something malfunctioning in the system. So I'm not sure if people got absolutely wrecked on that. I don't imagine that a random $250 billion flowed into Hex, since the market cap, I think, is like $5 billion. But I'm, again, you know, I can only guess based on what's happened in the past. And typically when you get a massive scam wick like that on something that's less than a few years old, it's typically like something wrong with the programming, or a hack, or some kind of weird leverage malfunction, something like that. So I'm really not sure at this point in time, but it's basically ruined the Bitcoin dominance and you know, total crypto market cap charts to where you like can't chart them. So we can kind of just turn off the auto, keep that off the screen, and then move it back over here, and it won't throw off the whole chart as badly. But essentially that wick, I mean, that wick was like a, I think, what was it, like 20% on Bitcoin dominance. So you can say what you want about Hex and, you know, be all about it. And I get the idea of it and I understand it. And, you know, I know a lot about Richard Hart. I've been following his stuff for, you know, the better part of a decade at this point in time. So, you know, Richard Hart's been in the space for a long time. He definitely followed the rules legally when creating Hex. The idea of Hex is great. It makes perfect sense. Why not just copy something in the traditional market that already works? It has been audited. It is a functioning, crypto on the blockchain. You know, from the all-time low or from its inception, it is up quite a bit. So by all means, you can be a hex believer. But anything that does this, as far as I'm concerned, anything that has a overall effect on crypto, for, let's see, what was it? 43%. And then immediately back to 63% in a single day. Anything that can affect the whole market cap of cryptocurrency by 20% and is just a giant, massive scam wick, to me, that's a huge red flag. So if you were, say, like invested in, you know, some kind of other asset or something like that, like the S&P 500, and then all of a sudden Tesla had a scam wick that affected 20% of the entire, you know, S&P's market cap, or you know, Tesla's dominance over, you know, the entire S&P, that would be a huge red flag for me, and I would probably be out of that asset permanently and never be interested in it again. Just because whatever happens in a situation like that, something has gone horribly wrong. Again, unless it's a misprint and I'm wrong, in which case I take it back. But typically misprints will be fixed within hours, if not a day. It is still possible that they'll fix it, but the fact that, you know, he was, I don't know, there's just a whole bunch of, there's too much uncertainty and junk behind something that does that to be into it or believe in it. Fundamentally, as far as I'm concerned, something went wrong. Technically, as far as I'm concerned, something went wrong. And the fact that it can affect the overall market cap and Bitcoin dominance that much is absolutely horrible. So, but yeah, we'll put all that aside and continue going here. So based on the Bitcoin dominance chart, we are above the long-term. Actually, let me switch to a longer time frame. All right, so here we have the weekly Bitcoin dominance chart. So obviously, this was the massive parabolic altcoin run leading up to the top in January for altcoins, or December for Bitcoin. So we can basically do, based on moving averages, we came up and got rejected at the 200 moving average. And then from that, those rejections, we basically sold back off. So we are below those. So overall, Bitcoin dominance is bearish as long as we're below the 200 moving averages. We are attempting to slowly push back up here. Again, ignore the massive scam wick. But overall, it looks like this was a dead cat bounce off of the rejection. Now, we could come back up here and test it once again. We put in that high, lower high, lower high. Looks like we're just putting in another lower high. So right around the area where we'd potentially be topping out. So it basically just looks like, you know, altcoins will continue to just steal the thunder of Bitcoin. Definitely looks like continuation. But we did get that move from the bottom right here all the way up to the top where we're at right now. Let's check from the top to the bottom and then the bottom to the top. Bitcoin dominance is a weird chart in the sense that it's always going to potentially be like in a downtrend. Because there was no altcoins, so it was at 100% at one point in time, and it's always going to be getting lower. So it's essentially like an inverse chart to like other charts we would be looking at. All right, so from where we sold off to where we came up to, we got just above the 618 on that all-time high that we put in here, but did not make it up to 786. But obviously the moving averages were the most important thing. After those rejections, we came back up, and it looked like we were coming back up to retest that 618 right here. Still looks like that. That's also going to be our diagonal trend line. So I would say Bitcoin dominance is probably going to rise a few more percent back up to like that 66 range, and then find resistance. If we break out, potential targets to the upside would be that continuation to the 786, which would be 77.6%. That would likely indicate that we were going into another bear market or selling back off. As where if we did get rejected here and continue back to the downside, If we look at the previous, from the high, we sold back off. We made it down to our 236 right here, and then got back above it. So the next target would be the 382. I'm again ignoring the scam wick. Next one would be the 382 at 55%, followed by the 0.5 at 50%, which would be a double bottom right here. And then we could potentially do something like put in like a head and shoulders or something like that with the massive sell-off as actual altcoins develop, like working products, long time in the future, as decentralized exchanges took off, as Bitcoin basically got overtaken by whatever it's I think honestly Bitcoin is great and it's going to always exist and it's going to be the oldest and the longest and the strongest, but at some point in time there's going to be something technologically that's better than Bitcoin or more useful than Bitcoin that I think will eventually overtake it. And it doesn't mean I'm bearish on Bitcoin long term. It just means that often the first in a space, the first mover, the first in technology, whatever it is, over time is going to get beat by something else. So because there's going to be solutions that people haven't even thought of yet, and eventually one crypto is going to come along and do that. I don't know what it'll be, obviously. I'm sure somebody out there is probably working on it now, but there's also thousands and thousands of other projects that are trying to fake like they'll be the future that won't be. But eventually at some point in time, Bitcoin dominance I think will take out this low right here, but who knows when that's going to be. It could be 5 years, 3 years, 10 years, 100 years, I don't know. But at this point in time, looks like we're going to just continue back down in that downtrend. It looks like we basically got our bounce back up, and then we're just going to continue to sell off. Now, if we do get above the 618, we could potentially come up here to the 786 and put in a high. We have technically put in a low, a higher low, a higher low, a higher low. So it's not unrealistic to think that Bitcoin dominance is going to come back up here to that 77, 78 range. But again, it's unlikely that it would ever, we could come up again to 85, but it's unlikely that it would ever get back up to this range. Because there's always going to be believers, there's always going to be other shitcoins, there's always going to be something out there that does actually have value. Based on indicator oscillators, multiple green histograms in a row crossing above the slope line. Slope is still to the downside, but we are just about above it right now. So this is a key area we'd find resistance. If we break through, I would expect a massive move to the upside. And again, often where you want to take those moves is when you see two green histograms in a row. But again, you can get fake outs like this, but when you get a few things lining up, like we're in the bearish control zone, we're getting the hard buy on this bad boy, we're flipping the slope back over, we got multiple histograms in a row, we're now crossing the red above the 21, price action is above that area, it's likely now that we're going to see some kind of continuation to the upside. Again, we could see a rejection right here, but it could get rejected, find support at the 236, and then just continue up, could just blast straight through this up to the 200s, could just continue on to the upside as some of these other shitcoins just start to die off. So that is Bitcoin dominance and a little bit of why Hex is kind of pissing me off recently. All right, so this is our monthly chart on this one. Obviously the idea of the DXY is that it's always going to be in a downtrend. Just like Bitcoin, it's going to be always losing value overall based on assets. That's just how our system is built. So you would always expect it to be in a downtrend the same way that Bitcoin is always in a downtrend. What this looks like to me is a high, a lower high, and then potential for a lower high, along that same line up here when we move back up at 110. Or I have a couple things drawn on this chart already, so we can just use those. We are above the 200 moving averages right now, as a matter of fact. We are above the 200 moving averages right now, came down for the retest. And we put in basically a low back here, a higher low, a higher low, a higher low, a higher low. So anybody that says this is in a downtrend, I agree with you, but it has not been in a downtrend since 2008. So if you want to say the dollar is in a perpetual downtrend and it's going to zero, I completely agree with you. Over time, all currencies will go to zero. All money, I should say, currencies rather versus money will go to zero because they have no intrinsic value to them. But if you're looking at this as a trend from 2008, we are in a 12-year uptrend inside of this massive downtrend. So I'm not sure what time scale you're going to trade on or do technical analysis on, but if something's been doing something for 12 years, I'd say it's probably reliable to go on that. It's the same way as saying Bitcoin is overall bullish. because for the last 12 years it's done nothing but go up. Now, are you going to be able to trade inside that 12-year range if you're in a 3-year downtrend? No, you should probably be trading to the downside. But overall, you're in an uptrend. In the same way that this is macro overall in a downtrend, but we are in a 12-year uptrend, and then inside of that 12-year uptrend, the previous high was back here in 2016, the end of 2016, beginning of 2017. So now we're in a 3-year downtrend inside of that, and now we're putting in basically a triangle consolidation pattern. So, it's all relative to what you're looking at and how you're going to take it into account. So we're still in a monthly downtrend technique on this. We still have multiple histograms to the downside on this, but we're at key levels where we potentially find support and get that continuation to the upside. So, it's important that you pay attention to what's going on, the time frame, and how it's relevant to you being able to make actual moves in a market. Because trading anything longer than a 3 to 5 years time horizon, a 10-year time horizon, it starts getting pretty ridiculous. How are you going to ever trade that and use that functionally if you're thinking 10 years in the future? So much can change. So, it's tough to do that. But you'll see here on the weekly now, you can see that correspondence with the 200, how it lines up with our 377 and 528. So they're basically designed that on the shorter time frames, they're going to treat you just like the 200 would. So we are below the 200 in this situation. We are getting rejected at the 21. We are getting rejected at the parabolic SAR, but potentially best place to take a trade, either to the downside if you think we're going to get continuation, or to the upside if you think we're going to break the SAR and continue on up. But I'll tell you one thing, when the SAR is this steep like this, on a massive slope like that, a lot of times that's the bottom of your move. Even if it's going to be like a dead cat bounce like this and then get continuation. This looks very close, if not bottom, to me. I was saying that back here when we found support previously. We obviously have a low, a higher low. The slope is upside on the Stoch slope, and the histogram is moving to the upside as well. I would expect to find resistance at these moving averages, etc., as we get up to them. But it basically looks like we're getting ready to break through and get that strong move up here. And once again, when they were saying they're going to print all this money and all this, and the dollar is going to go to zero and all that, where is it at? Did they ever do another stimulus? Did they ever print more money? Did they ever do any of that stuff? No, they didn't. They basically just said they were going to. Everybody got bullish, and then they didn't have to do anything. So, that was basically just the old hoodwink. I'm going to turn these off just so it's not too convoluted. And then you can see I already have, I deleted all the stuff on any other charts I had, but I'm just going to use this because we are getting towards the end, and we've been going for quite a while. So you'll see that we're basically putting in a series of triangles. Put in a triangle right here, and then, triangle, broke through, got the measured move exactly to the upside. Put in a high, higher high, higher high, low, higher low, higher low. Broke down through this right here, but I think that was just a massive fake out. We came back to retest it right here, but it's just like I was talking about how sometimes you'll put down, we had the same thing going right here, broke down below it, and then moved up. And then that was our new trend line. And then we got a massive move after that. So we broke down from it right here again, and then what's going to happen next? Same exact thing. We break up and then put in a new high, continue to the upside. So you could start doing something like this. So we have basically that green one and the slope, and then the blue one and the slope, and now we got the yellow one building right here, and I would expect the same thing. Now, in the event this does break to the downside and take this out, we have our targets mapped out here at 78. If it breaks to the upside, we have the measure move once again of this triangle pattern that we're putting in right here, which is that 110, I think it was, range. 115. Based on the overall macro though, and the resistance coming down here, that would be our third touch of this line. We had our top, we had our retest up there, we put this line in place, and then the retest of that macro line would be the 110. So that's where I would expect it to go to the upside, and then again to the downside as well. But nothing has changed for me on the dollar. I'm still bullish on it overall. It's still the world reserve currency. Overall macro, sure, it's bearish. It's designed to go down always over time. It's obvious. That's what it's meant to do. But overall bullish on any tradable useful range. So we're going to look at silver. Obviously got plenty of history on silver. All-time high was back here at 50 bucks. Previous high that we just put in right here was at 30 bucks. Same thing. We had essentially like the downward sloping resistance. Took that out. Still putting in a lower high. Next key resistance, 35 bucks. Next key support, 20 bucks. But essentially, we are in a monthly uptrend. We flipped the slope over with the histogram right here. Found support, found support, found support. Still on the move to the upside. Still green. No histogram reversal to the downside. We have overall blue slope on the Stoch slope. We are approaching resistance range. We obviously got that massive sell-off. Bearish engulfing candle consolidation. Never got below the 8. 8 is above the 21. Everything is above the 200. Overall, extremely bullish. We never really got below that 200. We had like 1 or 2 candle closes below it right here on the monthly. But overall, this thing has just been in a massive consolidation for years. And then if we switch over to a little shorter of a time frame on the weekly, obviously 2 histograms and then the break of the triangle. That was a descending triangle at the top of the range. I honestly thought we were going to get continuation there just because of the situation with the economy and everything like that. But the stimulus and the money printing and all the stuff around the world and everything was obviously enough to hold the economy up. So we did see that retrace. I would like to have seen retrace back down to like that $20 range. But it seems less and less likely as we continue in this range. We are below the 8, but still above the 21. Once again, we're above all the moving averages in an upward posture. So while we do have these histograms here, I'm expecting a bounce very soon off of the blue slope line as that often acts as support. And then from there, we need to see, should we take this as a selling opportunity if we get back up here to like this $25, $27 range? Or are we going to get continuation to the upside and all-time highs? So fundamentally, I think we will get continuation. But we have to see what the chart tells us, like technically. And then just looking at the fib from the bottom. From the bottom to the top. We are basically just below the 236. Slowly kind of rolling over. If we do sell off again, I would expect that $21 range, $20 range that we were talking about. That would be the 382. That would line up with the 50, potentially 55, depending when it happens right here. But again, we could get that move all the way down to like 18 to 20 bucks. It's going to hit like the 200 moving average as it creeps up, and also be the 0.5 of this move from the low to high. But got to be careful with stuff like this, because if you're paper trading it, that's one thing. If you're trading derivatives, because we did get down to $11, which is obviously a massive sell-off. We did get up to $30, which is obviously a massive pump. But still, if you try to buy silver, what are you buying it at? $26, $27, $28. Eagles still going for $30, $32. At no point in time, even when silver was paper trading at $12, you could not get it anywhere on any of the like silver physical websites, pawn shops, anywhere like that. You couldn't get it anywhere less than like 25 bucks. Anywhere around me, anywhere that I saw on the internet, on like things like eBay and stuff like that, it's still selling for over $30 an ounce. Meanwhile, while it's like $23 an ounce, you really can't buy it anywhere for like less than 26, 27, 30 bucks. So again, you got to be careful with the paper trading of stuff like gold and silver, because it's always easy to move a derivative in the direction you want, much less easy, much more difficult to move actual physical prices in that direction, because you're just not going to find actual real sellers. And there's definitely silver and gold are not only an investment but a hedge, fundamentally and technically, from other assets. So even though they stay correlated, you could find somebody always on an exchange to sell you actual Bitcoin that you can put in a ledger, for whatever the price is on the exchange. But you cannot find actual silver for what the price is on an exchange in the same way, or gold for what the price is on an exchange in the same way. So that's a big difference between derivative markets in things like crypto and derivative markets in like S&P stocks and stuff like that versus derivative markets in physical assets like gold and silver. So, you know, we got targets to the downside. As far as targets to the upside, this is a good example of fib extensions as well. We are actually above the 1.618 of that previous sell-off top to bottom. The next fib extension I have on my chart is the 2.618, which is going to be like 45.84, so 46 bucks, which would line up with essentially like a retest of all-time highs. And then just one more time. If we use the all-time high to the all-time low, you'll see that we topped out exactly where you would expect at the 618, which is, you know, bullish move of the bearish dump after a massive consolidation, after a breakout of the triangle. Silver's a perfect example too. We have this descending trend line right here. We break above it, sell back off, break above it, and you'll see now we have the slope line that's extremely steep right here, and then we have the slope line that's less steep right here, and then we have finally the breakout above those previous highs. So that's like the parabolic like reversal taking place. And then if we do get above the 618, rather if we sell off from the 618, that would be the 0.5, which is where we found support on that previous move, the 236. If we get above it, our next target's going to be the 786 at 36.50, followed by the 886 at the 42, and then in between is going to be that 45, and then obviously the all-time high at 50. So there we have it. That is quite a few assets and quite a long live stream. All right, great. I'm going to call it there, guys. Thank you all. Appreciate all the support in the group. I am still feeling sick. Last couple days, I'm feeling worse again, which is not unexpected as I know how this thing works. You know, you have like your ups and downs, same way that you do in a chart. So, but I do appreciate all the well wishes. I appreciate everybody, all the support and everything like that. And hopefully things will be back to normal with the channel and with my health sometime in the near future. But overall, keep an eye on these markets. Very, very key points right here. We're very close to the election, very close to you know, key support and resistance levels breaking on different assets. Number one, top thing, not financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research and trade responsibly. Protect your capital. Take care of your family. Pay down high debt. If you have debt on a house that's at 3%, that's not what I'm talking about. If you have debt on a credit card that's at 20%, that's what I'm talking about. Get rid of high interest debt, because there's no point in trading assets or investing in things if you're not going to make more than you could by just paying off an asset. And if you have debt that's a high percentage, you pay that off, it's a guarantee gain of that percentage you would have had to pay out. So that interest is essentially your gains by not having to pay it. As where if you invest in an asset or you trade or whatever, you know, you're not going to have that same guarantee. Things don't just always go up. It could just go sideways for the whole time, and you're paying that interest. And if you didn't make at least 20% on the money that you're paying interest on, you might as well have just paid that off. So based on statistics, based on, you know, the past, the best thing to do is pay down high interest debt and take care of those positions. Back off on the leverage and wait for trending moves, long trending moves, and then you could potentially leverage positions and get a little more greedy or whatever. But always take profits along the way, and most importantly, always protect your capital. Don't let your fundamentals get in the way of your technicals. Don't let your technicals long-term get in the way of your fundamentals. But the best case scenario is to have your technicals, your fundamentals, and all your other stuff lining up. So there you have it, guys. I'm out of here.